Portfolio recommendation. Now remember, as an investor, you are managing risk. You're not drawing lines on charts and trying to pick winners that'll go up tomorrow. You build a portfolio that you're holding for 3 to 5 years, and everything you invest in, you have that idea that is 3 to 5 years. Hey, maybe you're going to get out in 6 months because you realize you were wrong, or it went up so much that you want to de-risk, whatever. But that's the intention, okay? And so within that, there's a few things to look at. Now, what we're going to talk about, we're going to talk about crypto and stocks and actually real estate, okay? But first, you got to make sure you have enough cash, and I mean cash, not cash that you're holding to invest. There's investable cash, right, that we're going to put into these investments. But make sure you have enough cash to live so that your investments that you're holding for 3 to 5 years, you don't have to sell when it's not the right time. So, and that's different for everyone. I'm retired, so I want to have 2 years of just cash sitting, earning no interest in JP Morgan, Bank of America, maybe a little in a money market, earn some interest, but only 2 clicks away on JP Morgan to get that cash out, okay? Now, if you have a job and you're making a ton of money, way more than your expenses, and you're really secure with it, you might not need to hold any cash because you've got it coming in. You got to figure that out. You want, and be conservative. Don't get caught with your pants down. With your portfolio, remember, we want the upside, right? And we were always watching out to make sure there's no downside. But never, for 1 second, do you ever want to have a chance for total destruction, blow up, and get killed and get caught with your pants down, okay? Play it safe. Have enough cash. Great. So now, you figured that out. You got enough cash to live. And then, you have some cash left over that you want to invest. My video from yesterday talking about we're in the boring low. This is not a stupid time to be investing, and that's all you want to avoid. Just don't invest when it's stupid. 2021 was stupid. Now is not stupid. And if we're lucky in hindsight, you'll be like, oh, I can't believe I bought in that 1 month. It was the low and you got lucky. Great. So you have cash, and you're going to put it into a portfolio that we're building, stocks, crypto, real estate. You may have some other amazing thing that I don't know about. It's fine, but that's what we're going to talk about. But if you have more cash to invest, I would divide it by 4 and deploy it over the next 4 months, because we're getting late in the boring little bear market, okay? And there are risks to holding cash. We have inflation, and they're backed by treasuries. There's all kinds of problems in the world. So that's my advice. Now, great. So now you figure out. So then the question is, what should the portfolio look like? Okay. So let's start with crypto. Okay, now, listen, if you're a newbie, I do not, if you're just getting in, I wouldn't go more than 10%. So 1 to 10% in crypto. You know, if you were in crypto from previous bubbles and you have something, you may want to build it up to 10%, or, you know, put in another 1 to 10% if you want to increase. Now, for someone like me who's been in the market for a while, and I've been killing it because I'm not like those guys who draw lines on charts, and now it's 50% of my net worth is in crypto, and I'm leaving it there because I think I know what I'm doing. But I don't advise anyone to try to get there. You get there because you earn it. So that's an amount for getting into crypto. Now, what are you going to invest in? First of all, most of you, and it's not about, smart enough and this, that. It's like really, crypto is like venture investing. What that means, it's like very early stage, super risk in that, like anything could happen, right? It can moon and be a lot of money. It can go to zero. It's very risky, okay? So ETH is the only one that I feel like, if it was a stock, like maybe it would be IPOing right now, you know, or would be, it's like that sturdy. ETH is the only one that I would say, okay, 5 years from now, it's definitely going to be adding more value to more people 5 years from now, significantly more, and therefore the ETH will be worth more. Now, I've done videos, and there's a million videos you can talk about what is the value of ETH, but to me, this is the safest. BTC is fine, okay? I am convinced that ETH beats BTC. Last cycle, and remember in the video from yesterday, talk about the cycle, you don't measure from the crash and from the peak that it was at for 1 minute. You measure boring low to boring low, right? So in 2019, Ethereum's boring low was around $250, let's say $275, and this boring low is around $1,500, or let's say if it was at $2,500, whatever the X. It's ETH, boring low to boring low, ETH beat BTC by about 300%, okay? And I think in the next bull run, ETH will beat BTC again. However, the first 6 months to a year, traditionally, BTC does beat ETH at the beginning. Maybe that won't happen this time. But if it does, I don't want you mad at me because I told everyone just get into ETH, and then for 6 months everyone's yelling at me because BTC's mooning and ETH isn't. Okay? So, hey, if you are just like, you're like, okay, this makes sense. I know enough to be dangerous. I want to get my foot in the door. This is all you buy. Do not worry about the other tokens. Most likely, ETH beats everything. And you don't have to worry about it. And it's not going to zero. This is all you need. And, then you could do 50-50 ETH and BTC. I would do if I was doing just these two, I'd do 90% ETH, 10% BTC. I would at least do 50% ETH. Less than 50% ETH, I'm worried for you. There are some risks to BTC, even in the next cycle. It'll probably do fine, but just saying, okay? So you figure that out. Okay, so that's, okay, now with your ETH, some of these things get where it gets a little bit more advanced. Now, if you're in something like Coinbase, and I don't know what other exchanges they are, where you live in the world, but crypto is really about holding your own. If you're not holding your own keys and you got your hardware wallet, or you're doing whatever you do, if you don't have a ton of money, you don't need a hardware wallet, but you're managing your own keys, which is not for everybody. And people are like, oh, crypto's too hard because you have to own your own keys. It's fine. Someday it'll be easy, but you're not going to get a 10x gain when it's easy, right? I mean, you got to work a little bit in life, and that's where we are. It's not the easiest thing. It's not for everyone. If you're in America or wherever Coinbase may be, I know I trust Brian Armstrong to not steal from you. However, it doesn't mean the government can't knock on the door and steal from Coinbase, but I trust them. So if you're in a centralized exchange, you should only own ETH and BTC. You're not even in crypto. Like, don't start venturing beyond, okay? Trust me on that. It's just, you'll do better. Okay, now, with your ETH, though, you can stake your ETH, which helps secure the network. If you don't totally understand what that means, again, you should only be in ETH and BTC. If you understand staking, there's a lot of places to stake it. If you're in Coinbase, and if you're in a centralized exchange, they may have a thing to do staking. Now, I don't know about these other exchanges. It might be some sort of fake scam thing, and they're not really staking it. And and then maybe, I don't know. Coinbase, I trust. They have it, it's cbETH. They stake your ETH. Some of your ETH you can stake. You'll earn, listen, if you stake your ETH, you get like a 4% on it. I think you should stake, 30 to 50% of your ETH. But again, dollar cost average, get in slowly. You're not going to get killed if you don't do it. It's only like 4%. Unless you do frax, sfrETH, ETH. That earns more. And to understand how all that works, this is advanced stuff. So I stake some there. You got rETH. And who else do I trust? There's one more. Did I write it down? No. Oh, yeah, Lido. Yeah, and, Lido's got high market share. Everybody's worried about it. I'm not that worried about it today. But I would, stETH, again, it's fine. But it's just, We want to get market share in these other ones. So don't put it all into the stETH for the sake of the community. So you want to stake some of your ETH if you can, and if you can figure that out. If you can't, it's fine. ETH goes up 10x. You lose out on 4% on an extra 10x. You know, sorry, okay? But if you can't do it, don't stress and don't panic. You got time to figure it out. Do a little work. Remember, you know, making money, traditionally, people have to work to make money, so don't cry about it, right? Okay, so that's our ETH and BTC. And now I'm going to tell you what I recommend for the advanced investors. I'm talking, and again, when I say advanced, it's not even, you may have been in this for a while. I mean, again, you hold your own keys, you're watching this shit every day, you watch all my videos, you're into it, you're in the crypto rabbit hole, you can't get out. Okay, here's my, I would say ETH 60%, and like I said, 30 to 50% of that staked. We've got our BTC. I'm just going for 10%. And then ETH layer 2s. I'm now recommending 3 options. The OP token, I have some faith in that. We've got Matic. It's Matic, which is going to become Poly. You need to stake this. I think they're paying like 8. You can get 8%. If you stake it, again, these are advanced. OP token, you want to delegate for votes because they keep doing airdrops, but you have to delegate your tokens and to somebody who will vote. And then you know they've been rewarding with free tokens and airdrops for that if you do that. The other one is Base, is a Coinbase's layer 2 built on the Optimism software. Well, how can you invest in that? I like Coinbase stock. Now, I'm going to talk about stocks in a minute. But I like the Coinbase stock for a bunch of reasons. And I think it's going to get caught up. I think in the next bubble, we're going to have a layer 2s on Ethereum mania. Because some of you listening will be like, what is he talking about? Yeah, I heard of layer 2s and this and that. It's one of those things like people don't know what it is. But it's not that hard to understand. And when tons of money starts rushing in there, everyone's going to understand what it is. And it's new. And oh my God, it's going on. It's just, I don't know. I get a feel for these things of when everyone all gets all excited at the same time and you get a crazy mania. I think there's going to be tons of apps. And you're going to see thousands of layer 2s. Everyone's going to be launching a new layer 2 every minute. It's just going to be pandemonium excitement. And everything moons, and there'll be stupid ones that everybody wants to get in at the last minute. Just hold the leaders, please. And then when everything crashes, if you didn't get out, at least you're in a thing that's not going to zero. All right? Plus, you're in ones that definitely will run, not the one that your brother-in-law told you about. And, you know, and then it never happens and you didn't get, okay. So, layer 2s. So, I would dedicate 10% to some mix of the layer 2s. For a while, I was like, only Matic. And I am probably most confident about Matic. I'm starting to gain faith about OP. And Coinbase is more than just layer 2s. And they're part of something else that makes me optimistic about OP. So I'm putting all those 3 in a bucket here. 10%. Maybe you could go a little bit more if you really understand what the hell's going on here. You know, and there's other layer 2s. But I don't know. I don't have that much confidence in any other ones. So that's 60, 78. We're at 80%. Oh, I'm sorry. Because I added all these, I did change it. Okay, so 20% in layer 2s, right? And I don't know. I almost feel like this is going to get crazy and there's going to be a lot of other things. Maybe you got some insights. I think you can allocate to that. And then finally, that leaves 10%. 10% left in our crypto portfolio, and I just spread it out. On these, I like my FXS stablecoin, and they got a borrow and lending platform, and they've got this ETH staking. They're doing a little bit of everything, and they seem to do it well. I don't know. It's a good, but again, 10%, so maybe it's 2% each. FXS, which is Frax, Link, Chainlink, Uniswap. You know, they're the leader. It's such a good thing. But will the token ever accrue value? And a lot of people argue it won't, and why the token. I believe the token has done shit for, years. But I hold on. Again, it's only 2%. So let's not get crazy. That's why I say a little bit for these things, is who the hell knows? GRT, which is a search technology for searching crypto stuff. Hard to follow it, but and then an SNX synthetic. This you have to do. You have to be on the optimism layer 2 with this thing and stake it and claim your rewards every week. I mean, these are all work. Well, Link has staking coming. I think you just own Link. And Uni's no work. You just own it. GRT, you got to stake. But it's also work, and then you got to pay attention. I literally could just wake up. Now, I had Aave. I used to have Aave, and I just was like, oh my God, they have this risk where, I feel like it could almost suddenly be get killed with that whole problem they have with the CRV token, leverage, risk, and it's just these things are so risky. You do not need to get involved in these. And if you're comparing boring low to boring low, ETH may beat everything. It's just so much easier. Don't worry about chasing the hard stuff. Okay, so is that everything here? Okay, so that's your crypto portfolio. Now, I'll just talk a minute about real estate. This real estate is good for, you get it. It's it ain't going to zero. It won't go down that much. Unless you got a real pain in the ass property and the amount of work and putting and upgrades and all this stuff, it could go, be expensive. However, usually it's fine. It holds your money. And it goes up, but not that much. Certainly not compared to crypto, not compared to stocks. And most people who think they're making a ton in real estate aren't factoring in all the cost for maintenance, all the cost for interest expense, all the cost for the broker on the buying and selling, and all the cost. They don't count it in. I bought it at this and I sold it at that. And then there's a ton of costs that make. But if you live in a house and you like it, you're going to be there for 10 years, own that home. That's sort of a no-brainer. And whenever you get to a bubble peak, when we're at a boom, like in 2021, and then the next one, I don't know, maybe it's going to be 2025, I'm going to tell you, take some of those profits, the ETH that's up 10x, sell some and pay off your debt on that house. And then in the next crash, instead of going down 80%, you're sitting on your couch, not losing a penny. In fact, you're gaining money because you saved on the interest. Oh, my interest is only 3%. In 2022, if you had a 3% gain, you would have been happy. Okay, so real estate is it's good to hodl if you have it and it's fine and it's not too much work, especially, like I said, house you live in. And then someday you leave that house. You could keep it and rent it. You know the house. Okay. Finally, stocks. Now, listen. I'm not a stock guy. I'm a crypto. I feel like I have a knowledge advantage in crypto. I know more than a lot of people. When it comes to stocks and any individual stock, there's so many investors out there who study this stuff 24/7. They know, and there's so many stocks out there. So listen, I'm going to tell you what I like. I'm going to tell you what I know and what I'm confident about. Doesn't mean that all other stocks suck. And I'm not claiming. My outlook is that my house holds its value. And, it was ETH that could have gone down 80%. Didn't go down at all because I put it in this house, right? And my stocks, I want to protect my value. But at the same time, I hit it with Tesla. I hit it big, it was like crypto, went up 10x. So, hey, maybe we get lucky, and I have some confidence on some of them, but my outlook is that I protect my wealth by, on the booms in crypto, pulling out and putting it into some stocks and real estate where it'll be less vol and a little bit more boring. Don't be shy. Everybody's looking for more excitement. Boring is good when it comes to holding money. and saving money in the long run. And some of you with the excitement in the ETH doesn't go up enough for me. If you really want excitement, do drugs and go to a rave, go skydiving, go water skiing naked. Like, there's plenty of things you can do for excitement. Don't fuck up your investments with it. Okay. So stocks, this is what I'm saying. Okay, first of all, energy is so important, and oil, I think, we're going to see oil prices go very high over the next whatever period of time, and they're running now, but maybe it pauses, or who knows, and I'm not trying to predict. But energy, long term, we got a problem if the world grows at all, especially with the idiot politicians who are, running the world right now. If we elect Vivek Ramaswamy and we get a bunch of nuclear reactors in 2 years, it's a whole nother story. But as it stands now, oil's going up. People are understanding what's going on with nuclear. I think it's coming around, which is the safest, cleanest, cheapest form of energy. And whatever, I'm not going to start arguing about it right now. So when it comes to energy, I don't invest in oil because I don't know it that well, and I don't even like oil long term. I believe long term in uranium. So you got URNM and SRUUF, and I've been saying this for a little bit. It's been running nicely. What are we saying? 15%. And I did get into this thing, and it's been running, and now it's already over 15%, over 15% for me, and I'm not selling any. So, I don't know. I'm holding that. I like it. So, but this is sort of energy again. Maybe there's better stocks. Maybe more than me, but energy is important, and I like the idea. I'd rather have one thing that I really believe in and I understand, like uranium, than have a diversified portfolio of me throwing darts at a bunch of energy stocks. That's how I roll. Unless there's a fund you like. And basically, URNM is a fund of miners, and SRUUF is just uranium itself. So it's a little fundy. Okay. Then international. So outside of the US, there's a few countries I like. Brazil, Singapore, and India. And again, I like to focus. I just think India is the country of the next 10 years. Now, there's an issue of, okay, India's going to do well, and maybe I'm right, but what stock do you buy? I don't know. I'm throwing darts here. EPI is an Indian fund. So again, maybe I'm contradicting what I just said, but that's an ETF fund, but I do have a little Brazil and a little Singapore, but I've decided to just, triple down probably 75 or 80% of my international investment is India, because I think India is the best. So there's a 20% there. Then, a lot of you may have S&P 500. I like Berkshire Hathaway and better than S&P 500. I put them as similar things. I almost interchange. So, and I don't know, there's SPY, there's other ETFs. I like Berkshire, BRK.B, and that's a 25%er. I do not think that this thing outperforms by any means in the next boom. It certainly did outperform during the crash. I think it was going up when everything else was going down. Remember in 2021 when I said start de-risking, plan your exit strategy, and one of the things I was getting into was Berkshire Hathaway, right? Taking those profits, put them into a house which didn't go down, and put them into BRKB, which went up. I mean, the last bubble, I fucking killed it. You'd think my channel would have followers. But I know, there are a few of you who watch me who think I'm great. Hey, I am. But nobody knows it. Okay. Okay, so Berkshire, 25. So we're at... whatever, you can add it up. They might add up to 100%. We'll see. Got a couple more here. Where are we? Okay, gold. I don't know. 5%. I've had moments where I like 10%. I'll probably want 10% when it starts going up, and then it's too late, or my 5% will turn it into 10. I don't know, but gold forever just doesn't work, and it's the old, I'd rather have digital gold, but you gotta have some. I like my 5%. I used to think 10, but it's a thing. Gold, this one has not been great for anybody. Okay, Tesla, remember, like I said, I love my Tesla. I love Tesla and Elon in general. Just long-term, amazing. And we had that run, and it went up so much that I was like, this is insanity. And I took some money off the table, a lot, actually. And I had this in an IRA, tax-free thing, so it was sort of easy. But now I'm worried I don't get enough back in. And then 5 years from now, I'm like, shit, I would have been richer had I not taken money out when I did. So I got to get back in. I've been trying to get in. I thought it would go lower. I remember the day it was at 112 and I didn't buy. And, so now, I'm accumulating. I'm dollar cost averaging into Tesla here, and I'm praying that this thing goes down. We got interest rates going up, and it could totally dump. I'm hoping it does, but it might not. And, you do what you can. But I know that I'm getting in lower than when I sold a lot, but will I get enough back? Okay. So, yeah, Tesla I love. 15%. Again, long-termer, baby. It's great. I talked about my Coinbase. That's another 10% for me, because I think a lot of Wall Street, when their earnings come out, everyone's going to be shocked. They're making money from this L2 thing. They're making money from from not just trading fees. And when Wall Street starts to understand that, I think they're going to be bullish. And then there's going to be a bull run. And Brian Armstrong, who runs this thing, is a winner. And we could have, I don't know, not anytime soon, but, I don't know. In a few years, at some point, I think the U.S. government, I feel like, we'll see what happens. But the government sort of is at war with Coinbase and crypto. So that is not good. I know they won't win the war, but wars can be expensive and bad, especially for a regulated company. So there's significant risk with this thing, but I'm a believer. And then finally, I love genomics and everything I hear from smart people, because I'm not one of those, but a lot of the genomics companies are very undervalued at this point. Now, I wouldn't know what to buy, so I like ARKG. This is Kathy Wood's ARK Investment Genomics Fund, and I got a 10% in that thing. Hasn't moved for a while, but I like it. Okay, and I think that's it. So, let me know what you think. Let me know if you have any questions. Also, one thing I enjoy doing, I do this for free, obviously for free, but for fun. From my YouTube channel, I can make $1 per video, which, covers my costs. But anyways, I enjoy doing this. And so one thing that's fun for me, post in the comments. Here's my portfolio. What do you think? Ask me. I like that. I had people DM me privately. I'm spending a half hour of my time helping some random person with their portfolio. Oh, I forgot to say, I'm not a trained financial advisor. I'm supposed to, okay, so I'm not. Use your, and what I would like to then tell you is why those guys are all a bunch of idiots with their 60-40 portfolio. Oh my God, Gensler, the scammer, is going to get mad at me. All right. So that's it. Comment, subscribe, like, notification button. And in the description, I got links to my Twitter. What else? I don't know. Let me know what you think, guys. Thanks for watching. See you soon.